Not sure which loan products and options are best for you? Stick around for information on how to determine your financing strategy. Hi, I'm Paula Flagg with Paula Flagg Homes. And today I'd like to talk with you about available loan options and things you should consider before choosing loan terms. There are a few mainstream loan products available in the marketplace today. Conventional loans, which are typically backed by Fannie Mae or Freddie Mac, VA loans for veterans and active duty military members, and FHA loans, which are great for multi unit properties, low down payment options, and lower interest rates, and for people who aren't able to qualify for other loan products. Just a little side note, this is not just for first time home buyers. Now, I'm not going to go into detail about all of those types of loans today. However, if you're interested in learning more about which loan may be right for you, reach out to me and we can talk more. What I am going to discuss today is how to compare loans from lender to lender and loan options such as points. Yeah, it can be confusing trying to compare all of the variables, and hopefully, this will make it a little bit easier for you. When it comes to comparing lenders, it's important to consider more than just the interest rate and fees, though, when you're buying a home. A high level of service is crucial. We need to have the loan officer's cell phone number. They need to be available on evenings and weekends, and they need to be able to close on time. So it's hard to quantify the value of service until you find yourself in a situation where you lose your dream home to another buyer because no one could reach your lender, or you lose your earnest money deposit or have to compensate the seller for missing or delaying closing. And these are really things that happen when buyers choose a lender that's not able to perform. Sometimes that good deal can cost you a lot of money. Now, when comparing the terms of loans from lender to lender, the numbers you want to focus on are the interest rate, fees due at closing, such as origination fees, processing fees, and points. More on points in just a moment. The thing about loan estimates from lenders is that most of the estimates are for fees and services that the lender does not provide. So some lenders are very conservative and will estimate these numbers high, and some will be a little bit more modest and estimate a little lower. However, the actual expenses that you will incur will be the same no matter what lender you use. For example, homeowners insurance, the property taxes and transfer taxes, or settlement fees will be the same regardless of the lender, even if you're paying cash. So don't compare these numbers. It's important that you are prepared to pay these closing costs. Just know that you shouldn't use them to evaluate a lender. So the next item that you want to consider is points. Mortgage points are fees that you pay up front to reduce the mortgage interest rate and by extension, your monthly payment amount. Now, this process is also known as buying down the rate, and 1 point is equivalent to 1% of the loan amount. So how do you know if you should pay points or buy down the rate or not? Well, usually buyers' financial decisions are driven by either how much money they have saved up for upfront costs, like the down payment and closing costs, or their monthly income and expenses. So paying points will increase your upfront costs when you're closing on a house, but will give you a lower monthly payment. Not paying points will keep your closing costs low up front, but will result in a slightly higher monthly payment. So the first question to ask yourself is, do you have the extra money to pay the points up front? And can your monthly budget handle the higher monthly payments? The next thing you need to consider is the break even point on paying points and comparing that to how long you intend to have the mortgage. For example, let's say you're buying a house with a $500,000 mortgage and 1 point is $5,000. Paying for the point will reduce your monthly payment by $150. If we divide 5,000 by 150, we'll see that the break-even point is 33 months, or just shy of 3 years. Now, if you think you're going to have this mortgage for at least 3 years, then paying the point is a good idea. If you plan to sell the home in less than 3 years, or you plan to refinance in less than 3 years, then paying for the point may not be the best option. Now, I know I just did math, so if you tuned me out, you can start listening again. And if that all seems overwhelming to you, I love this kind of thing. So let me represent you with your purchase and I can help you with all these calculations. Lastly, let's talk mortgage insurance. If you're putting down less than 20% of the sales price, you may have to get mortgage insurance. VA loans don't have mortgage insurance. So typically, this is an extra monthly fee that's added to your payment. And once you reach 22% equity, the mortgage insurance will be removed from your payment. The other option is lender paid mortgage insurance. And in this option, the interest rate is slightly higher, but there's no additional cost to your payment for insurance. There could be tax advantages to lender paid mortgage insurance since mortgage interest is generally tax deductible. You will want to check with your accountant to make sure if that will apply to you. Also, the payment could be slightly less using the lender paid option. On the other hand, the borrower paid mortgage insurance could be removed once you have 22% of the original sales price in equity, or you have an appraisal that shows you have at least 20% equity that would lower your payment. My advice is if you pay a small down payment and you don't plan to make any renovations to the house that would increase the value, go with lender paid mortgage insurance. If you put down 10 to 15% or plan to do renovations that can increase the value of your home to get you to 20% equity, stick with the traditional borrow paid mortgage insurance and then monitor the market and have an appraisal to show the new value of your home so that you can have the mortgage insurance removed from your payment. If you have any questions about this or anything else related to the home buying process, please give me a call at 202-670-5880 and I'd be happy to help. Thank you for taking the time to watch this video today. I hope it was helpful. And as always, thank you for choosing Paula Flagg Homes for all of your real estate needs.